Welcome to Trading Lounge and the European Indices. We'll look at the DAX, the FTSE and the AEX. And for the DAX here, it's probably a good idea to actually have a look at the S&P 500 actually first, because we've got a bit of a dilemma in here and we need pretty much a logical strategy to help us with any decision making. But let's just grab the S&P 500 for a moment here. I'll just bring this back into the hourly chart here for a moment. So for the S&P 500 here, we've got this situation here where we've got wave 3 here and we're looking for wave 4 over here, and we're looking at an A wave coming down here, an A and a B and a C wave coming into the 50 or the 61.8% retracement level basically, and then a move down from that point. Now, this is really quite low off its high here. There are some stocks like Amazon and Goldman Sachs that are testing their old highs here. So what we need to do here, logically, is stay with this current trend moving up here until proven otherwise. You can watch the video for this on the US video, but basically if the 2700 here became the retested resistance, then would be on the short side from that point. So that's really from the outside, the outset. There's probably better entries we can get for that, but at the moment we're looking at this pushing up higher through here, but nearly there. So if I go onto the tick chart here and count up from the A wave, the B wave, and going up into the C wave here, we're looking at 1 and 2 and 3 and 4, and then up for 5 here. So we're looking to see if we're going to get a tested support on 2730 here, and if that's the case, watch the video for this. Then we'll look at higher ground up here at the 61.8% mark. There'll be a little 5 wave structure in here, then it'll pull back and retest that. So we want to see if it finds support on that 30. But all I'm putting out here is that we could be towards the end of it right here. Okay, I don't have any evidence of a turn, but this is kind of where we're looking and we're tracking it and so on. So with that in mind, we're looking at the DAX here. We were looking for, from this low here in a nutshell, we'll look at this a bit more detail. We're looking for a move up as wave B here, and then wave C to the downside here. It's also possible that this wave 4 here can be over here as well in terms of an A and a B and a C here. So we would need to see that rally before that. So we're just keeping an eye on it. It's possible, but we're not seeing any show of strength in this particular move up through here so far. We know 500 is the number 5, wherever you see it, is the second strongest number in the market after 1. So it's a real sort of showstopper here, and unless that 500 becomes a support here, then it's difficult to look at ourselves going long at this point. But I do want to drill into this and come up with a little strategy within here. So on the, we'll just take our time and go here on the 4-hour chart here. So we were looking at all this being down here as wave C here on this low here. This was the low on the cash market, and for the other European indices as well on the futures and CFDs and so on. It ended up like this, but on the cash market, in a lot of cases, this point here was lower than this one here. So we've been looking for a corrective move up. So we correctly look up at the 50-60% retracement level here as a sort of starting point, and we're looking at this as being an A wave and a B wave and up for a C wave here. But from this low here, we have 5 waves moving up here already. So it's quite possible that, if I can just expand this up a little bit, it's quite possible that we can have, if I can just copy that, is to have that C wave there already. And it's not such a bad thing, because we know that in corrections, the A wave can also equal the length of wave C. So C and A can have a relationship of equality in there. So it's possible that that's all done and dusted and we're going to move down from this point here. But this is what we need to talk about a little bit and get a little bit closer to the market, come up with a little bit of strategy. We don't want to miss anything. But this is, as a B, when you look at it, all of this being an A wave and a B wave and a C wave here for this orange A wave of minor degree, then But to have this little B wave, this B wave here, this is really small, isn't it, compared to that massive A wave here, you know, in terms of time and so on and so on. So it kind of doesn't make sense. So I think that we really need to be on our toes a little bit here. So we need to be open-minded, flexible, and we need to be looking at ourselves being long or short here, okay? So just be open to being in either direction, and you should have a balanced mind like that. You should be able to go short just as well as you can go long, vice versa. So let's just go into the hourly chart and then the tick chart and so on here, and we'll come up with a little bit of a strategy here. So it's possible, copy that, to have wave C here. I'm going to put it in a dulled out grey thing here as an alternative. The other one that we've got here, it's possible to have this as wave 1 and 2 here, and then 3 here and 4 and 5 here. It would take the S&P much higher too, wouldn't it, in that case? So this is where we've got to basically look at a situation and trade what we see. I mean, this makes a little bit more sense to me, to be honest. But at the same time, so this move that's moved up through here, and then it's moved back here. So it's moved back to its 50% retracement level here, 50 and the 60 here, not quite the 60% here. So I was thinking that just on the outside, we can refine this, that if the 200 here, because this is 12,000, of course, and then 100, 200, and 300, which make up group 1 here. So I know that if the 200 here at this stage of the game, if that became the retested resistance, then the market would be pulled down from that point. So we could say from the outset here, if the 200 became the resistance, then start looking on the short side, okay? Also, we need to be looking on the long side as well. So we'll copy this segment and we can just put that up here, and we'll get a better understanding of that, because we don't want to miss a nice strong third wave here either, do we? You know, I mean, bullish days are normally, for me, Friday and Monday. I think Monday holds the record for bullish days. Well, on the ASX it does. So I'll just save that. And it can have big bearish days as well. I was thinking of 87 actually. That's a while ago. Okay, so we're just going to go in now and refine this a little bit here. Okay, you know, we have to look long at this stage too, because this 12,000 here, group 1, which is 1, 2, and 3 here, group 1, we can see that the market was resistance here, yeah, and now it's moved up and it's testing it as support here. So really, all of this, you know, all of this game through here is all about changing from resistance to support here. And I know that, you know, I don't like trading short, like above the number 3 here, like that. So to me, we're still in a bullish trend to the upside here in that case, but we want to be prepared for going short. So I'm just going to save that again, and I'm going to go into the tick chart here. So I'm just going to bring this out to 1000 here so we can see a little bit. So that's the B wave down here, and as I mentioned, copy that. It's possible to have that as wave C here, but I'm just going to grey that out, close that. So it's possible. Now these two little tops here, it's basically a double top here. So it's possible to count this down as 1 here, and then an A and a B and a C back for 2 here. But when I look at all this here on the cash market, and I won't bring it up because I'm spending too long on this already, but when I look at all this on the cash market here, it counts down nicely as an A and a B and a C wave here. And that could also be put, if I was counting this here, could also be put here as well here with this over here. So I've labelled with wave 2 being here, because it's in line with the cash market of having 3 waves down here. The cash market could still fail because it hasn't gone as high as this. This is some after hours trading here, so it can also fold down here as well. But at the moment, it has 3 waves down. So you could say to yourself, on the cash market, if the cash physical market on the DAX made a new low wherever it was here, then we'll be in a bearish mode from that point. Okay, so that's a very critical, simple point to look at on the physical market for the DAX. If that low gets taken out, then it creates a bearish pattern here, and then we've got ourselves a turn. As it stands at the moment here, when we're looking at this from this low here, it does appear that the move up here is 5 waves, so 1 and 2 and 3 and 4 and 5 here. And it also looks like this is an ABC corrective pattern here. So, first of all, from these highs here down to here, this is pulled back up into the 50-60% mark. Normally when we find 5 waves coming up into the 61.8% mark, then we know that we're bullish from that point. From this low to this high here, this is the 50-60% retracement level. So we could say that you know, the market still can come down to this point here. So what I was thinking is that if the cash market, physical market, makes a new low below here, that it's in a bearish mode. If this market moves down and finds the 12,300 in a bearish mode, then we can look on the short side here. So we're lifting it up from 12,200 to 12,300. So that's a bit more of a bit more of a refinement in that stage there. So I'll just put that here. Okay, so that's what we'll be looking for in this instance here. And also too, we don't want to miss anything over here as well. So if that top there gets taken out, then we've got a bullish pattern there as well. So of course, we're also going to have problems on, there's going to be, it won't be much of a problem. Four's not a problem unless it's $4 or 400 or something of that nature. So but we'll put that there. So really this move up here is not about the 50 and the 60% retracement level. Well, it is and it isn't. It's also about the 400 as well. So when a market is moving higher, it moves up to a level, has its arrival, reaction, first high above the level. So we've got the reaction here, so it can have the first high above the level, and then it can have its correction here and then move up there again. So that high there, when it comes, I can't draw on the tick chart over this side of the price here, but that's the pattern. That top is that top, that low is that low, and if we push up there, then we'll also have a retest of that 400 there. So a little bit like this here. This is the top of group 1 here in a way. Okay, so we've had the arrival, the reaction here, and then but it's just pushed up from that point there. So that's okay too. So that's where we are. That's all I've got to offer on this here at this stage. So at least we kind of, I got some sort of strategy there to be there. So the other markets are going to be much the same as well. So if I go to the Netherlands here, we were looking for the A wave, the B wave, and the C wave, and we're looking for it to move up into these sorts of spaces here, but it's still a long way off from that point there yet. So that could be all the way over here. Yeah, and we're looking for this to move up here, but this is basically that length there and this length here. This is also good here too, because the thing here is that we've also got group 1 as well. We've got 500, we've got 1, 2, and 3, which make up group 1, wherever you look at it. So here we'd be looking at the arrival, the reaction in 3 waves, yep, then the first high above the level, and then a corrective wave here. But it could also fail from here, but it could also move up from here, and that's why you can use this method here of this classic trading levels pattern here. There's only a handful of patterns that can happen at a level, and once you know them and you're patient, then you can work with them. So let's see if we get that push up here, and let's see how that comes back here as well. Okay, so I don't know if it's going to extend up here. The S&P are not suggesting it would do, but when I look at Amazon and Goldman Sachs and a few of those guys, it looks like it will move up that far. So I'm just not quite sure. We just need to be really careful at this juncture, that's all. And this will be the same for the FTSE as well. So with the FTSE here, we can see that if we look at this as the A wave, ABC here. So we can look at this is a little bit dodgy, but stay with me, which is wave 1 and 2, and wave 3 and wave 4, and then we'll look up for wave 5 coming up into 300 here. So it may not go all that way up here as well. It may just get up to this because this is the next resistance, all of this here. So it could fail from, it could certainly fail from this point here. The problem with this 1 and 2 and 3 and 4 here is that wave 4 overlaps the wave 1 here. So we may be looking at a bigger picture here in terms of up for 1, back for 2, up for 1, back for 2, and then moving up here higher. So I just don't know. So the short trade here would be, in this instance here, in the nutshell, would be under here, under the 72 number here. Okay, so we can just do this here and just mark that a little bit there. You want that. You want the 72 as a retested resistance. I mean, because at the end of the day, this is bullish because, the 72 is important to me, and I can see that it was resistance through here, and then it became support through here. So it's migrated from being resistance to support. So it's put itself in a nice strong position. It's not powering off or anything like over here, but it is making headway, and I know it's going to have trouble at this number here as well. Not because of the old high, but because of this number. It's the psychology of it all. So that's that. All right, I'll leave it at that. So no real clear pathway for the next session, but we kind of know what roughly where we need to be. Okay, cheers.